So this is the panel that we talk about the future, but I thought I would start with talking about where we are now. So usually this is done with a baseball analogy, what inning are we in? But you may have heard the Eagles won the Super Bowl early this year. So I'm going to ask you, what quarter are we in? Are we out of the first quarter yet in this crypto revolution? Call it what you will, Albert?
I would assume I would know anything about football.
There's 4 quarters. You get that? Okay. So.
Yeah, but isn't much of the game like in the last quarter or something?
We can talk about German football right now.
Yeah, I grew up with soccer.
Right. 22 people run around and Germany wins. Right, exactly. So yeah.
I think we're in the first quarter, maybe at the tail end of the first quarter.
So yeah, I grew up with baseball, so I'm probably going to go back to the baseball analogy. I think it's very early still, so I've said, we're in the mid-90s in terms of internet age, right? And a lot of people want us to be way farther along, but we're just not there, and there's so much left to be built. So I think we've been up to bat, we've maybe hit something, but we're on our way to first base still. It's early.
Okay, so let's dive in. What does that mean? What is it that really needs to be built that hasn't been built yet? So you're obviously working on some of that, Elizabeth. So why don't you, what do you see as the biggest piece that's necessary to scale this?
So yeah, so one of the things I love to harp on is the importance of infrastructure. I'll just go on these Twitter rants sometimes about it. And I think we've seen that this has been underinvested in this community of cryptocurrency, blockchains more broadly. In terms of building applications, well, you're not going to be able to have, say, millions upon millions of people in the world use, say, Bitcoin if there isn't the infrastructure there. So I noticed Ari earlier mentioned usability. I think that's crucially important. Being able to use these and not have an advanced, MIT engineering degree. In terms of the infrastructure for people to build applications, for a wide variety of people to use these technologies. Blockchains at the base layer really have a tough time scaling, and I'm happy to get into that in a little bit. Exchange infrastructure, APIs so that you can, say, potentially work with multiple exchanges, having compatibility, interoperability. All of these things are crucial, and we're just seeing the beginning of it now.
The economist Carlota Perez has this great framework where she studied many different new technologies that have come out, and she distinguishes between what she calls the installation phase and the deployment phase. It's maybe not the best choice of words because the two sound somewhat similar, but we're firmly in the installation phase. It's the time period where you put the infrastructure in place. One of the things that she has studied is that in these installation phases, they're often accompanied by speculative bubbles. So if you look at, Ari mentioned railroads, it's worth going back to really think about that. There was a time period when railroads actually had to be built, and there was a lot of excitement about what all the great things would be that one can do once railroads are in place, and so a lot of money poured into it. A lot of that money was subsequently lost, but it was still good because it put a lot of railroad tracks in place. And I think we're very much in that same phase. And again, let's think about the dot-com bubble. We are still lighting up fiber today that was put in the ground during the dot-com bubble. That's really important to understand. We can talk more about Bitcoin and whether it'll still be around 10 years from now. But a lot of that power and electricity that's being expended today on a proof-of-work system may actually turn out to be a crucial piece of infrastructure. It may also not, but there is some chance where that's actually real infrastructure that we're building now.
What does that mean, real infrastructure?
Well, it means the foundational layer on top of which everything else sits. So, today, if you have high-speed internet access, in all likelihood, it's because the backhaul is all fiber, and maybe it's even fiber to your office. That's how you get really high throughput. Infrastructure in this world means systems that can, write many, many transactions to a blockchain per second. It's something like 2-4 transactions per second, maybe more, a bit more, like for Bitcoin and Ethereum today. Visa, MasterCard do something like 10,000. A system like Twitter or Facebook do millions per second. So these are order of magnitude differences. And now we can talk more about what needs to happen on-chain versus off-chain, or layer 1 versus layer 2 systems. But fundamentally, these systems are tiny compared to any other systems that we're using. So there's a lot of work that has to happen.
Well, and people think that blockchains are efficient. Actually, the point of a blockchain is it's inefficient. That's its nature, exactly, on purpose. Databases are far more efficient and scale, far more effectively. I will say, though, so one cool thing is, with Lightning Labs, we're building LNG. It's an implementation of the Lightning Network. We did our first beta release for the Bitcoin main network on March 15th. Not a lot of sleep prior to that. Still recovering a little bit. But we can now do, using Lightning, my co-founder, for example, was doing thousands of transactions per second on his laptop, and that's just on one laptop. So we really are seeing the ability to potentially match the scale of, say, a Visa-like network that can do 40 to 60,000 transactions per second. Our goal is to be able to do more, one day potentially millions. And people ask, well, why would we even need millions of transactions per second? Well, it turns out it's probably not just going to be humans using this. There's a future where machines are transacting. And as a friend of mine, co-author of the Lightning Network paper, used to say, 100% of machines are unbanked. Kind of feel bad for the humans that don't have access to financial services, but the ability for machines to transact and have value and store value is really compelling as well.
So what, I'll get to you, so what incentivizes that infrastructure development? Because Albert talked about the railroads, and that was investors who were putting in capital to get returns, putting in the tracks or the fiber. But now with cryptocurrency, we've got all this money going to all these applications and these tokens and so forth. But it's a shockingly small number of developers really working on the core infrastructure. So obviously, Elizabeth, you're in this space.
I have a lot of thoughts about that. And actually, Albert and I had an amazing debate, Helsinki 2016 on ICOs. That was like super fun, exactly. I've been an ICO skeptic. So for my company, we recently announced our $2.5 million seed round, and we released code together with it, and it went viral on Twitter because we'd raised a normal seed round and actually shipped code, and people thought like, oh, nobody does that. Apparently we did. I was like kind of shocked when I saw these tweets that were getting thousands of likes and so on. I was like, oh wow, I thought this is what we were supposed to do as a startup. But I actually would posit, while I want to see a lot of investment in infrastructure, that's not the sole issue. For example, for our company, we're hiring protocol developers. We've had an open position for like 9 months now. It's actually really hard to find protocol developers and engineers. So for me, money is not going to be the sole answer, although investment does help, but actually education, training, and resources is crucially important to this. So we're a small company, we're 7, 8 people. So we unfortunately don't have the resources to train lots of people, but I know universities that are teaching courses. There's some really good training workshops. If folks know Jimmy Song, he's an engineer who's been doing great engineer training. We actually are just announcing some really cool scholarships for female engineers to take his workshop as well. So it's not just about money. It's actually about human talent and human capital.
So Albert, how do you see this infrastructure development actually happening? What's going to facilitate both the financial capital and the human capital?
Well, I do think you need tons and tons of projects to get a few that work. So, I mean, these sort of bubbles, in a way, are rational from a not individual investor perspective per se, but from a society level perspective. That is, I don't think when the dust settles, we're going to have thousands of different protocols. I think we'll have maybe dozens at best of protocols. But in order to get to, let's say, 12 really high quality protocols, we're going to have to try a lot of different ones. And so I think, while any individual investor in any one project may lose all of their money, once you zoom out one level and you think what's happening, how do all these protocols come about, I do think you need to try many of them. And it is unclear whether fundraising will be correlated with success. And that same was true in .com. One of the largest companies to come out of the .com bubble is Amazon. Amazon raised a piddly amount of money. Amazon had like sub $100 million in revenues when it went public. It raised a tiny amount in its IPO, and eventually built a super, super large company. So I don't think there's necessarily going to be a correlation between how much money you've raised and how important a project you are. So far, the single most important project, Bitcoin, didn't raise any money to get going. So I don't think you will correlate on a per project level, but on an aggregate level, as Ari was saying earlier, all this activity is now attracting more people. It is getting courses started. Those courses will produce engineers, and there's very much a pyramid of engineers. Like somebody who can write a script to glue some code together, that's one type of engineer. Somebody who can write a core service, like an API service, is another type of. Somebody can write a library that millions of people can use, that's somebody else. Somebody who can define a protocol, that's somebody else. And these things are sort of progressively harder, but you also need fewer of them, right? So, so I think that all of this activity that's taking place right now will, in hindsight, range from outright scam to breakthrough project. And obviously, the more time you spend and the more you inform yourself, the more of a chance, not guarantee, more of a chance you will have to figure out which is which ahead of time. That's why I think this is an exciting time period for investors in this space.
And also, this is a marathon. It's not a sprint. And I think a lot of people wanted it to be a sprint. December 2017 was like the craziest month in Bitcoin cryptocurrency to date. There was just so much going on. The prices were going out of control. The media, it was like during the holiday season 2017, all anybody could talk about, was Bitcoin, cryptocurrency, and whatnot. But this is really a long-term project in terms of this whole industry. And we're not going to solve, there are hard problems to be solved. The internet, we didn't have the iPhone in 1995, right? That took time. Building these decentralized applications take time. So I think it's important to realize that there's so much opportunity right now in this space. And it's not all going to happen overnight. There are certainly a lot of scams. I mean, there are ICOs worth billions of dollars with people who have millions of Twitter followers and only a white paper that was plagiarized. Tron. But, and I believe in building real technology and real infrastructure in the long term. And, I know there are a lot of students in the room, some engineers, some MBAs. I think right now we're at the beginning of this opportunity to build a new financial infrastructure. So don't think like it's by any means over. We're just at the start.
There's something I heard repeatedly today that I think is wrong, which is people say, oh, it's all moving so incredibly fast. If you focus on the noise, then that's true. But the actual underlying thing is not moving very fast at all. And so I think it's really all about how can you cut through the noise that exists in the space. There's a ton of noise. But the actual underlying thing is progressing much more slowly. And so if you can get to that, you'll see what the areas are that we need to work on, and those are moving quite slowly.
So what does that mean concretely? What is the actual
a great
thing?
example, I mean, you should talk about how long it's taken from thinking of Lightning to getting something like...
Yeah. So with Lightning, I was involved.
Just for people who don't know, just say just three words about what it is. Yeah.
So, sorry. For those that don't know, Lightning is a second layer on top of Bitcoin, and right now we operate on Bitcoin and Litecoin, but generally cryptocurrencies, that makes it faster and more scalable. So instead of the base layer of the blockchain, you actually have a second peer-to-peer layer that then can use the underlying blockchain for security, and you can transact instantly and at a high volume. So if Bitcoin is like a decentralized savings account, Lightning is like a decentralized checking account when you can transact instantly. So there are all sorts of really cool applications that you can build when you can do thousands of transactions a second instantly, and you can actually send 1 cent or fractions of a cent using Lightning. And we're seeing a lot of developers now build really cool applications today. Turns out it's not that easy to build apps on Bitcoin itself, and it wasn't designed for that, but Lightning was. So in terms of the speed, it's funny because on the one hand, things are moving slowly. For example, the original concept of Lightning is over 3 years old. I was involved. There was an initial white paper, no ICO. By the way, there's no Lightning ICO. There's no token. When people ask, what is a Lightning coin? I say Satoshis. For Bitcoin people, that's actually the lowest denomination, 8 decimal places of Bitcoin. So the paper was first released in February of 2015. There had been some work. I was actually involved prior. I reviewed and edited the original paper. Software development on 3 major implementations started in about late 2015, really got going in 2016. So about 2 years from initial software developer to beta, which is a decent amount of time. I will say, though, that there's also a community, and that's grown incredibly quickly. So some things take a while, and some things go fast. For example, we have 2,000 developers and testers on our Slack for LND, our software. People are running nodes. There are a couple thousand nodes now on the main Bitcoin network of people using Lightning with real Bitcoin. So there's also a lot of enthusiasm and excitement, but it's not going to happen overnight.
So what's the hard part? What takes so long?
Well, right now, so the initial beta for Lightning is aimed at developers and advanced users. We intentionally have a command line only for our implementation because it's just not there yet. We need to build out the infrastructure for Lightning itself to make it really easy for mobile and for desktop and for wallets and all of that. So user experience is crucial. Infrastructure related to these technologies to make the user experience better. For example, key management. How many people here have ever dealt with storing your own, a ledger device, storing your own private keys, writing down those 24 words? Maybe you don't want to say because security, but right?
What are your 24 words?
Exactly, right? And then you're like, okay, let me split these up and put them in safe deposit boxes. And wasn't this all supposed to be digital? So there are challenges still that we need to solve. And then just building out the infrastructure and getting the people that are capable of building it is a challenge as well.
So Albert, you said you're guessing that there'll be something like a dozen protocols that are successful in the long run. what's going to make the difference in terms of which platforms succeed and thrive?
Oh, if I told you that, no.
Secret sauce.
You know, I think with a lot of these systems, it's about ultimately what works. So let me give an example from a totally different realm. Version control systems. This is where software developers store their code. So for a long time, people were using a system called CVS. I'm old enough to have used CVS. I hope you didn't have to. It was really clunky. It was really,
It's not the drugstore, right?
Yeah, it's not the drugstore. That's right. And then some people came along and said, "Oh, we're going to build a nicer version of CVS." It was called Subversion. And then Linus Torvalds of Linux fame came along and said, you're doing it all wrong. There's a decentralized way of doing this, distributed way of doing this, I should say, and I'm going to write this thing called Git. And when Git first came out, it was really wonky, the only command line interface, only a few people used it. He started using it for the Linux kernel. Today, pretty much every new development project starts on Git. Why? Because Git just works, and it works way better than any of the preceding systems. So I think in some of these areas, ultimately what will be adopted is the stuff that actually works. No amount of marketing, no amount of hype around your white paper, no amount of size of your ICO or not ICO will make the difference. In the end, the stuff that works will, I think, succeed. And that's also why it can take a long time. It took from when Linus released Git to the extraordinary dominance of Git and places like GitHub today was more than a decade. And that's why I'm saying I do think these things really take time. And the people who were paying close attention and who understood why Git was superior to CVS or Subversion, they switched much earlier. And they benefited from doing that in many different ways. And I think the same will be true here. If you dig deep enough and you understand why one particular implementation, why one particular system or protocol is in fact superior, technically superior, then I think you can get a sense of what may win in the long run. Now, there are historical examples, if people think VHS versus Betamax, where that wasn't true. But it wasn't true because those markets were structurally different, right? Those markets were dominated by a few large corporations, and they were kingmakers for a format. So you had Betamax, which was far technologically superior to VHS, but there were a few people in the world who got to decide what was going to be used. I think this time, it's everybody gets to decide, and so I think actual technological quality will matter and will drive ultimate adoption.
It's funny because I actually use the VHS versus Betamax example with my engineering team for Lightning Labs just to tell them, technology alone may not win if, superior technology if it doesn't have the user experience and all the other things that come along with it. So I'm with you that superior technology is very important, but in and of itself, if it's hard to use, and I would say GitHub did something really important for Git. It made it extremely accessible, and now you see every major open source software project is on GitHub.
Yeah, so I definitely don't want to diminish usability. I think usability is extremely important. But if you're building great base level infrastructure, people will develop usability on top. I think that's what GitHub proves, and now GitLab, and there are many others. Okay,
well, so let me ask a variation of that. So Elizabeth, you're building on Bitcoin. So why Bitcoin and not Ethereum, and why not build that from the ground up with something with payment channels from the start and build a new platform?
Well, when Lightning was first conceptualized, there actually wasn't a live Ethereum network yet. But so the concept was to solve a key problem in Bitcoin, which was the original cryptocurrency, which is that public decentralized blockchains don't scale at the base layer to billions of people. So it was just looking at a problem and then wanting to solve that problem. So right now, as mentioned, we have support for both Bitcoin and Litecoin. Litecoin is very similar to Bitcoin, so we're able to just change a few things. But Lightning can run on top of other blockchains. And I know there are some folks in the Ethereum community that are looking to make Lightning, Rick Dudley, for example, work on Ethereum. So one thing I'm actually really excited about is interoperability, and I think this gets back to what Albert was saying as well. If we just have all these different protocols in silos, that doesn't work as well. There's this XKCD comic that I love where somebody says there are 14 different non-interoperable standards, like what should we do? And then they go on and they make like the 15th interoperable standard, right? Now we have nothing that's interoperable. So I think the importance of interoperability is key. And one of the things I'm really excited about that Lightning can enable is interoperability between currencies. So last November, we demoed the first ever Lightning cross-chain swap between Bitcoin and Litecoin. And what that means is you can actually transact on Lightning between different currencies without having to trust a central exchange. And I know we saw a lot of major hacks. For example, there was a $400 million NEM hack, like possibly the largest quote-unquote bank heist in history. So one thing that I think we're seeing talking about the future is a desire to get away from central custodians in this industry. I know we've talked to some exchanges that are looking to say, okay, how can we not hold all of the money for our users? How can we let users have control over their own funds? I think this also goes very much to user data. Seeing everything that happened, in the last few weeks, all the revelations around Facebook, we need to re-envision new systems where users can be in control. And I just got a letter like last week that my data was breached again. And I'm thinking, like, can we not have this keep happening?
Well, so yeah, I was going to ask about that. So maybe I'll start with you, Albert. So obviously with all the Facebook revelation and stuff, you get a lot of people saying, blockchain's the answer. We'll just decentralize it all. Does that make sense? Is that a possibility?
Well, so I think you will always be sharing your data with somebody for most things, right? So let me take an example from the medical world, right? So, let's say you have your medical health record in some encrypted vault for which you control the keys. At some point, you want a doctor to look at that, right? And so at some point, it's not just about, can I keep it encrypted at rest? Can I encrypt it in transmission? But you're going to send it to somebody else. And so there will always be some question, what is the other person going to do with it? I personally have been advocating for a world where I want people to be able to run general purpose computers. I think that's very important. I would like my doctor to run a general purpose computer so that he or she can run whatever software they want, and so that there can be a lot of innovation happening. But in that world, you have to realize that your doctor may be running something on their device that is actually compromised, and that your medical record may leak as a result when it enters that doctor's endpoint. There are people who are advocating for only lockdown endpoints in the world. I think that's a very problematic vision of computing. So I don't think this will be some panacea somehow for avoiding data breaches. I do think that we have come from a history of systems that had no security built into them at the get-go. And so those systems were very difficult to secure retroactively. Many of the systems that we're now building include security in the base layer, which will make them easier to secure. But I don't think there can ever be, in a world of information, a security guarantee unless you want to lock down endpoints, and I think that would be a very bad idea.
The current status of our system, though, is that it's so terribly insecure. There's so much more that we can do. For example, the mobile phone infrastructure. In a world where private keys represent money, it turns out that is a target for people that want to compromise and hack others. And then it turns out, I don't know if folks had heard about SIMMing, so it's called, mobile phone carriers don't verify or necessarily authenticate with a lot of users, so people were stealing others' phone numbers, getting access to their email account.
That was earlier this year, January.
I'm sorry.
I was in Thailand. That's good. Nothing was stolen.
So, by the way, everyone in this room, please call your mobile phone carriers and put a password on your account. But I know people that even had a password on their mobile phone.
I had a password on my account.
There you go.
So
and they still have this happen.
I was in Thailand, and I was in a hotel, and I woke up in the morning, and my phone said, SIM not recognized. I was like, oh, it's probably just trying to roam into some carrier that doesn't recognize it. And then I was also on the Wi-Fi network, and then within seconds I got, your Yahoo email account has been reset. And the only actual account that gave access to was my Twitter account. But yeah, somebody had walked into a T-Mobile store in the US with fake ID and had gotten them to switch my SIM to their phone.
Right, and in this world, I mean, we have this infrastructure around us that is so insecure that is not authenticating. So there's so much left to do, and there's so much more that we can do on that front.
Isn't it scary, though, if we're talking about a crypto world where the keys are on your person that actually controls everything?
Adversarially in a way that we didn't have to previously. I will say on the identity front, so there's this really cool technology called anonymous credentials. My team were interested in this. And the idea is that you can represent a factor attestation about you without giving all your information. So here's an example. If you're going to a bar and you give your ID, well, it has your full name, your date of birth, your address. In this world where you need to be paranoid, maybe you don't want everyone to have that information about yourself. What if there were a way for, say, the state of Pennsylvania to have attested in some way that you're over 21, and then you go to the bar, they scan something, all they know is that you're over 21, and that's it. And you don't have to disclose your name or your information about yourself. So I think there's a lot of really cool technology that should be built where you don't, the bar doesn't have to hold your data, it doesn't need to know your address. If I'm buying something from an e-commerce store, maybe they can just temporarily store, my address, send me something, and then it's not in their database with all my phone number and personal info. So the next time they get breached, then my data will be in the hands of yet another group.
So what about not just the security, but just the extreme concentration of power that these digital platforms like Facebook and Google have now by virtue of having all the data? Is there any hope that these new decentralized platforms will push against that, or will they just co-opt it?
Well, the big problem that we're going to have in terms of getting people onto alternative competing platforms is that the network effects of the existing platforms are extraordinarily powerful. And so we have this issue that even though we all carry a supercomputer in our pocket, there's this strange situation that when you fire up your supercomputer and you hit an icon, whether it's Facebook, Twitter, or whatever, that completely takes over your phone. Your phone now works on behalf of Facebook, it doesn't work on behalf of you. That's a very problematic situation, because what if I want to participate in Facebook and a bunch of decentralized systems all at once, and I don't want to be rekeying my tweets or posts or updates, and I don't want to be scanning multiple systems. I really want my software butler do this on my behalf. I can't do this because the big central systems don't have APIs. So I've been promoting this idea that instead of trying to use antitrust regulation, we should have some law that basically says, look, if you are a social system or a search system or any kind of internet system and you have more than 1 million consumer users, you need to provide every consumer when they request it with an API key, and that API needs to be able to do everything you can do in the app. And people think that's crazy, but if you look at what's happening, for instance, with bank account regulation in Europe, there's now regulation that's in effect, it's not draft, it's in effect, that every bank account has to come with an API. So that if I want to delegate interaction with my bank account to a third party, I can do so. I think that would provide a tremendous power shift back to the end user, and that would allow new systems to come up, because now I could simultaneously participate in multiple systems and have all of those interactions be software intermediate on my behalf.
And by the way, the ability to also revoke access is really important. Part of why there's a lot of fraud, for example, on Coinbase, is the ACH system, automated clearinghouse in the US, doesn't have the ability to revoke access. So if somebody has your bank account and your routing number, well, they can just try to have funds withdrawn from your account, and then, yeah, there are all sorts of things that go in there.
One more question before I open up to the audience. Governance.
So
go ahead.
Can I just make an audience recommendation here? With the current system, you should have 2 bank accounts. You should have one account where you keep most of your money. You should have a separate account that you use for authing all your ACH stuff, and you should then fill. It's like what people used to call a DMZ in the old world, where there was some stuff that was sitting outside of your firewall. So you basically want to have 2 accounts, one that you connect all the ACH stuff to, and you fill that with enough money to handle all your ACH, but you never have all your money there. So take that as a pro tip for how to organize your accounts.
Thank you. So last thing is a lot more we can talk about, but I want to ask about governance. So one of the big challenges in these decentralized networks is no one's in charge, so it's hard to develop. And obviously Bitcoin has gone through this long struggle about scaling and so forth. So can we get effective governance on these public blockchain networks?
So some people call it a challenge. I call it an opportunity. I am a Bitcoin fan. I consider myself a cypherpunk, if you will. I believe in the power of cryptography and privacy and how that can enable freedom for individuals. I actually think it's a good thing that Bitcoin doesn't have a leader. I think Satoshi, the creator of Bitcoin, who we still don't know, who Satoshi is today, not Dorian, although he's a really cool guy, for those that know.
We're all Satoshi except for Craig Wright.
Awesome t-shirt by Crypto Graffiti. I think people, they look at existing systems and they want the ability to have a decision maker. But in the Bitcoin world, we operate on this broad-based consensus model, and making changes is harder, but that also means that things are more secure. So there's this idea of move fast and break things, or move slowly and have a more secure base layer. I certainly identify with the latter in terms of the Bitcoin side. In some other communities, they have a different philosophy. But at the same time, we have the ability to experiment. I don't think there only needs to be one model right now. We can see what works for different communities. But that said, people think Bitcoin governance is bad, but I actually think it's a good thing that we have it like this.
I think we're also seeing interesting experiments of trying to build governance into the layer 1 system. Tezos is trying to do that. Algorand, which is a project we're involved with, is trying to do that. One or more of those experiments may work, or none of them may work, but it's good that we're experimenting. My partner Brad wrote many years ago about how governance of systems could in fact be a deciding factor of which systems get adopted. I think we're going to see that play itself out over quite some years to come. If you look at the history of protocols, many protocols have been extremely persistent. So we all still use SMTP for email. We all still use HTTP. SMTP is, 40 years old. Yeah. What happens with a lot of these protocols, though, is once they get to a certain layer of adoptions and lots of systems are built on them, they become very hard to change because you really can't make breaking changes at all. And so then you start sort of glomming stuff on. It'll be very interesting to see, because so much is already riding on a protocol like Bitcoin. It's very hard. You can't make a breaking change. Well, you sort of can, but it's very hard.
You could in theory. And that's also the theory of layers. So the internet has a variety of layers. You have TCP/IP, you have HTTP, the application layer. Similarly, blockchains have this function. So Lightning is layer 2. You can actually build a layer 3 on top of Lightning. And a layer 3 would be a protocol in and of itself. Think of a smart contracting layer, a high-frequency trading, and algorithmic trading layer. So you actually can build this up in layers. You don't have to have it all at the base of the blockchain, and there are different architectures that people are building out. But there's a lot that can be done there, and I'm really excited. We're still debating what layer 3 even means. Of course, everyone in Bitcoin loves to debate, so there are Twitter debates like, what is layer 3?
And that incidentally is the biggest knock on Ethereum, is that it's trying to do everything in the bottom layer, which is not how, at least historically, we've constructed computer systems.
And I think we'll see. We'll see how it all pans out.
All right, let's open it up to questions. Let's see. Yeah, why don't you go right there? There's a mic coming over here.
The promise of blockchain technologies and Bitcoin and Ethereum was decentralization, right? And what we're seeing is kind of a re-centralization, just with a different set of players. So do you foresee a world where we will live in a truly decentralized world? And what do we need to get there?
I think the concern about re-centralization seems somewhat premature and overblown to me, frankly. I think what happened in the web world was the protocol made publishing permissionless, but it didn't have a way of managing state. In fact, the HTTP protocol specifically is a stateless protocol, and the vector for re-centralization was the database. I mean, Facebook is nothing but a gigantic database in the sky of who we are, who our friends are, and our status updates, right? So I think right now it's too soon to worry about the re-centralization of these systems. I think we have a lot of innovation going on, and many of these systems are competing on how decentralized they are. And I think you can have long philosophical arguments if you have an EOS type system where there are like maybe 23 nodes, but everybody actually owns a different node, whether that's more or less decentralized than Bitcoin. And I just think those are really fascinating arguments, and my answer is sort of time will tell.
Right, and then part of why we have centralization in terms of, say, custody of funds gets back to this user experience question. It's a lot easier to have your funds stored on Coinbase than to manage your keys for yourself. This is still a challenge, but my hope is with better user experience, and really, we're in the early days, like with the command line, and remember, like for some people in the room, text-only web browsers, right? So we need to move to, say, the cool mobile apps, and we're not there yet. But I think that will really help as well on the decentralization front.
Let's see. Yeah, I'm going to go in the back there.
Thanks. Are there any trade-offs to transacting on the Lightning layer as opposed to the base layer?
Definitely. So it's funny because I think some people in the Bitcoin world want to think that Lightning is a panacea and it solves all problems. And I've actually been very public about saying, no, Lightning is not the be-all and end-all sole solution to every problem of Bitcoin. It's not the only thing that can scale Bitcoin. We try to be realists in that regard. So for example, right now, Lightning really only makes sense for smaller amounts. I mean, it's in early beta. This is a new protocol. Like, you should not put your life savings on Lightning. You should put like $10 or $20 worth if you want to experiment and you're advanced. Later on, it is possible to have larger amounts transacting in the network, but for now, it really only makes sense for much smaller amounts. I mean, kind of day-to-day transacting micropayments. In terms of security, so Lightning just has a different model of security. It's still secured by the underlying blockchain, but there is a case in which somebody who's broadcasting what we call an outdated state, and if anybody wants to talk about this afterward, I'm happy to, could try to compromise somebody's funds. And the cool thing about Lightning is there are all these technologies that not only ensure that they can't if the blockchain's functioning normally and it's not under attack, but you get all the money of the person trying to attack you. But there's just a different model for security on Lightning. In terms of liquidity on the network or the way that funds flow, there's some really interesting research that we're doing around that as well. But this is all very new. Bitcoin is tried and true. We know it works. Of course, there are downsides to the transaction limits, the fees spiking and then going back down. It's very unpredictable. But yeah, it's just a new model. We really haven't seen layer 2 at scale yet. So we're trying to figure it all out. We're predicting it. And we are, by the way, hiring engineers and other folks. So feel free to get in touch afterward if you're interested.
Let's see, down here.
Hi. We had referred to, Albert, your blog earlier. And one of the first sort of theses that you had put out there was around fat protocols. The fact that value will likely accrue to, I guess, what we're referring to as layer 1. Now that we're sort of seeing the emergence of layer 2 solutions and single-purpose tokens that maybe specifically for investment or governance or access, do you feel like that thesis needs to be amended? Do you think it still holds true?
So the term fat protocols was coined by Joel Monegro, who was an analyst at USV, now has his own firm called Placeholder. And just to explain what the idea is that with the HTTP protocol, the value accretion happened into companies such as Facebook and Amazon, et cetera. The value accretion happened at the application layer. The idea of fat protocols could be that if, let's see, lots of ICOs happen on Ethereum, that the value actually accretes to Ethereum, the underlying layer. And I think that was true. I think, lots of ICOs happened on Ethereum. One can have a discussion as to whether that was a good or bad thing or indifferent. But that drove a lot of value creation in Ethereum itself. And so I think by and large, again, time will tell, but the idea that if you can capture state in a chain that is not controlled by any one value extracting entity, that then the value should reside in the chain itself more so than in the applications built on top of it, I think that still makes sense.
Okay.
So I'm actually a skeptic of that concept. I think, of course, there is value at the base layer of these protocols, but we haven't even seen what's possible yet in terms of applications. Of course, my company, we're building out that infrastructure to make it possible, so I'm biased. But I actually think, if anything, we just see 2 layers of value that can be built.
Okay, last question over here.
Thank you. Elizabeth, I'd like to ask you specifically sort of about Bitcoin and scaling Bitcoin. How important is it when you're building out this layer 2 solution to follow what you think may be Satoshi's vision? And on the one hand, you've got Roger Ver saying it's very easy how to scale. Satoshi says bigger blocks. On the other hand, I saw today on Twitter something went viral about actually there being an email from Satoshi to Mike Hearn in I think 2009 about sort of payment channels.
People love drama. It's probably my answer to that question. We are following, our vision of what we believe is important in terms of building technology. Satoshi did actually originate the concept of payment channels, which is one of the building blocks of Lightning. But no, this is not some religion where we're following the leader. No, we're building technology that we believe is important.
Awesome. Well, thanks to both of you. It's been a really great discussion.